house, is it the best investment ever? No, I don't look at it as that.
Buying a house can be an investment, but oftentimes it's not.
And then the people were lied to and said, oh, a house is a great investment. A house is one of the dumbest, worst investments a human being could possibly make for one reason. You have to pay the house doesn't pay you.
Okay, so these financial gurus say, don't buy a home as it is a dumb investment. The biggest financial gurus say, don't even think about buying a house in your 40s as it is catastrophic. But then here I am, an investment banker with almost 20 years of experience in finance, saying, you know what, I'll go ahead and buy a house anyways. Well, last year I turned 41 and last month I closed on this house for $1.2 million. Now I won't lie, buying this house has been one of the most important and most fearful decisions of my life. Buying $1 million house almost made me have restless days for quite a while. But at the end, I pulled the plug and I could not be happier with the decisions. But from a financial perspective, does buying a home in your 40s make sense? Now, buying a home is a huge financial decision. But it's not just about the money, and that's where these financial gurus get it wrong. Now, I'm a numbers guy, and I know that buying this house did not make much sense financially. Why? Because I was renting a luxury 2-bedroom apartment for nearly half my mortgage, and it was more than enough for my family of 3. But as much as I loved the convenience of it, I longed for a place where my 4-year-old could run, swim, ride a bike, or just play outside without any restrictions. Also, I longed to customize the place according to my own needs. And that's why a house is so important for a family person. It's about where you build memories, raise a family, or create a peaceful space to unwind after a long day. It's a place which your children will call their own, and it brings you a sense of contentment, which a rental unit never can. Now, all of that is exciting, but along with the excitement comes hesitation, especially when you are in your 40s. Are you too late to the home ownership game? Will this impact your retirement plans? Should you even be thinking about a mortgage when you're this close to hitting some of life's biggest milestones? Now, there are essentially 2 reasons why people hesitate to make a home investment in their 40s. Number 1 is perceived financial instability. By the time you're 40, some people believe you should have already purchased a home, or at the very least be well on your way to paying off your mortgage. There's a notion that taking on a mortgage in your 40s could interfere with your ability to save enough for retirement. The too late mindset. Another common concern is that starting a mortgage in your 40s leaves you with less time to pay it off before retirement. A 30-year mortgage, for instance, means that you'll be making payments in your 70s. There's this idea that buying a home should happen earlier, so you can retire debt-free, which by the way is not impossible. By the end of this video, I will tell you tips that will help you retire debt-free, still affording the house in your 40s. Now let's take a step back from the negative aspect of late home ownership. I personally feel 40s is the perfect time to become a homeowner. Now I understand that 40 is a crucial age. You are in your midlife, half of your professional life is almost over, and you're looking forward to the other half. If you're married and have children, a big focus is on your children's education and college fund. Also, retirement, which by now is looming over the horizon. But there are strong points to buying a home in your 40s as well. For starters, you're more financially prepared. At 40, you're probably at the peak of your earning potential. You likely had more time to build your savings, improve your credit, and pay down debts like student loan debt or personal loan. This means you're in a better position to qualify for a mortgage and get a better rate. Plus, you've had years to learn from any financial mistakes which you made in your 20s and 30s, so you can approach home ownership with a wiser, more informed mindset. You know what you want. When you're 40, you've had time to figure out what you need in a home. Maybe in your 20s, you would have been comfortable with a small condo downtown, but now you want more space, a yard, a home office. You're more likely to make a home purchase that fits your lifestyle long term because you know yourself better. Home ownership can still be a great investment even at 40. Even though you're buying later in life, a home can still be a great investment. Real estate has the potential to appreciate in value, and owning a home can provide financial stability in the long run. Plus, if you decide to downsize or sell your house in the future, that equity can actually help you fund your retirement. And the last one is, you can plan for a shorter mortgage. If you're worried about being tied to a mortgage in retirement, you can consider a 15-year or a 20-year mortgage instead of the traditional 30 years if you can afford it. This way, you'll pay it off faster and won't have mortgage payments hanging over your head in your later years. While we're talking about home ownership, let's tie the emotional aspect as well. Now, buying a home at 40 has emotional layers that younger buyers may not fully appreciate. Like building memories. A home is not just an asset, it's a place where you'll create lasting memories. If you have a family, this is where your kids will grow up. And if you're living on your own or with a partner, it's where you'll establish routines, traditions, and special moments. At 40, you might be ready to settle for a space that truly feels like home. Second is stability and comfort. By 40, many people are looking for more stability in their lives. Owning a home gives you that sense of permanence and comfort that renting often doesn't. You can make the space your own without worrying about rent increases, landlords, or the constant uncertainty of moving. And lastly, you have a space to call your own. Owning a home means having control. You can paint the walls any color, plant a garden, or renovate the kitchen without needing the permission from a landlord. It's a space where you can express yourself, and that's a powerful thing. Okay, so what consideration should you be thinking about before buying a home in your 40s? Well, you have to take the extra step towards cautiousness when buying a home in your 40s, and we will get that to it in a minute. But first, let's look at the generic considerations you should be keeping in mind before buying a home. Number one is your financial stability. Buying a home is a huge financial investment. Unlike an apartment or a rental, the maintenance of which is taken care of by your landlord, the house maintenance expenses are taken care of by you. Apart from your monthly mortgage payments, there are a couple of expenses that are often overlooked when it comes to owning a house. The first one is insurance and taxes. Now, these are included as a part of your monthly premium, but are often overlooked when computing house affordability. These amounts can be significant. For example, my house has a tax of $20,000. That's almost $1,650 per month. Also, insurance is another $180 per month. So I pay about $1,830 per month for insurance and taxes. Second is maintenance. Depending on if you're buying an apartment or a house, on an average, a house would have a higher maintenance expense than a rental. That is because all ancillary expenses like HOA, amenity fees, co-op charges will now route through you and not your landlord. This can be a significant number. Also, if you have a pool or a yard maintenance like I do, you can easily factor $300 to $400 every month depending upon which state you are living in. The third is repairs. On an average, you need to factor 1% of your house costs as repair and maintenance every year. Repair and maintenance can be a significant expense, especially on houses that are a bit old. And lastly, increased utilities cost. Now, these are more of a concern if you're switching from an apartment to a house. The cost of utilities like electricity and heat can increase significantly in a large house compared to an apartment. But the good news, however, is that at 40, you're likely more financially secure than you were in your 20s. You have probably built up some savings, improved your credit score, and paid off some debts like student loans or personal debt. These factors will actually help you secure a better mortgage rate and make home ownership a bit more attainable. Now, second is house down payment. So, how much down payment can you comfortably afford? Now, there are companies like Zillow or Rocket Mortgage that finance your home at 1% down. But remember, that's the recipe for disaster. Why? Because your mortgage rates are tied with your down payment. A larger down payment means smaller mortgage payments. Also, a 20% down payment means you don't have to pay for private mortgage insurance. But on the flip side, a larger down payment also takes a bigger chunk of cash out of your savings. I suggest people to make a minimum of 10% down so you can have some money to renovate the house when you move in. Now, 10% will allow you to get a better rate and also not completely eat into your savings. Also remember to keep some money in the bank for contingencies. The third is job security. Do you see yourself in your current job or industry for the foreseeable future? The last thing you want is to be unsure about your job or your current location and end up making an investment that ties you to it. A home purchase only makes sense when you have a stable employment and don't foresee significant career changes that require relocation. Now, fourth is debt to income ratio. Before buying a home, make sure you're not over leveraged or your debt is not beyond your comfort level to pay. The standard for debt to income ratio is 43%. What this means is that your total monthly debt payments divided by your gross monthly income, which is your income before taxes, should not exceed 43%. So for instance, let's assume that your income before taxes are $10,000 per month. So 43% of that is $4,300. Your existing car payments are $500 and your student loan payments are $1,000. So your debt to income ratio in this case is $1,500 divided by $10,000, which is 15%. This gives you $2,800 as a maximum limit to use towards your mortgage. Remember, a mortgage should comfortably fit into your budget, not add unnecessary financial strain. The general rule of thumb is to keep your housing expenses, including mortgage, taxes, and insurance, below 30% of your gross income. Now, number 5 is housing market trends. Look at the housing market trend in your area to see if you are buying in a seller's market or a buyer's market. A seller's market means the inventory is limited and you have to fight for price, often resulting in a bidding war. A seller's market also means that you probably have to overpay for the house, which means less appreciation in the future. A buyer's market is much more preferable, but is also relatively rare given today's scenario. Just ensure when you're buying a house, you look at the future potential and the market trend. If the market seems to be in a rising trend in the coming future, you have a much higher chance of building equity in your house. The last one is retirement savings. Buying a home can feel like a great investment, but you should be mindful of how much you're putting towards your mortgage versus your retirement fund. At 40, you're much more closer to retirement, and you'll need to strike a balance between paying off a mortgage and ensuring your future financial security. Now, moving on to special considerations for buying a home in your 40s that younger buyers might not have to think about that much. Number one is retirement plans. One of the biggest questions you have to ask when buying a home in your 40s is how a mortgage will impact your retirement goals. If you're taking out a 30-year mortgage, you could still be making payment well into your 60s and 70s. Does that fit into your retirement timeline? Can you afford a shorter mortgage term and, if possible, plan on paying off the mortgage early to ensure you retire debt-free before retirement? A house should not derail you from your retirement goal, especially in a time where everything is getting so expensive. Now, second is children's college fund. If you have kids or are planning to have, their college expenses could be in the middle of the repayment plans for your home loan. Now, buying a home in your 40s means balancing mortgage payments with other financial priorities like building a college fund. So you have to keep this in mind and ensure you have a plan to tackle it. Now, I know that both retirement plans and college fund may sound scary if you're not confident about either, but you don't have to be. The good thing about financial planning is that you can start in your 40s and still be able to achieve your financial goals with diligence and consistency. So first, let's talk about the college fund. Now, I have a 4-year-old and I don't have a 529 account for him. Now, I am 41, so this should be as big of a concern for me as anyone else. But I have made alternate arrangements to ensure this risk was covered. Now, back in 2021, when the mortgage rates were down to 3%, I bought a real estate property for $400,000. Now, I put $40,000 down and financed the rest. My finance cost came to $2,400 per month. The property does not net me anything as of now, but it takes care of my principal and interest payments and has already appreciated to $500,000, which means I have an equity of somewhere around $130,000. By the time my son is ready to go to college, the renters would have paid off an additional $150,000 of my home loan principal balance, and the house would have appreciated to at least $100,000 more. Which means when I sell the house, I would be carrying an equity of around $350,000 in the house, which would be enough to cover for his college or any advanced studies. So this is an alternate way to build your college fund. Find a rental property, put 10 to 20% down payment, and then rent it out. Ensure the rent covers the monthly mortgage payment and then some. Sell the property when your kids go to college and use the funds for their tuition or your retirement. Now, this has two benefits over the 529 account. The funds are not tied to be only used for college funds. If you need money for an emergency, you can cash into this and not be penalized. Any additional increment in the property beyond your children's college fund could be used for your own financial benefit. Now, at the time of withdrawal, you will be taxed capital gains tax, which is far less than the income tax which you will be charged to the 529 withdrawal when cashed prematurely. Now, moving on to how you can repay the mortgage that you took in your 40s to ensure you retire debt-free. For this, I suggest to make one extra payment every quarter of your principal loan balance. Now, your mortgage is made up of your principal balance plus interest plus taxes plus insurance. A majority of what you pay go towards the interest, and a very small payment goes towards the repaying of the principal balance, at least during the start of your mortgage. In order to trim the timeline of your repayment, the goal is to pay off the principal faster so your mortgage balance becomes less. If you make one extra principal repayment of your loan every quarter, you can repay your loan balance in 15 years as opposed to 30 years. Now, the alternative is that you can make extra one mortgage payment every year. In that case, you'll shave off 5 years from your mortgage term. Now, while I know this can be a major hassle for many, but you can achieve this by buying a home within your means and using the extra cash to make this quarterly or annual principal repayment. So your goal should be to limit your home purchase price to 80% of your maximum mortgage capacity, so early repayment option is available to you. Now, that's it for this video. If you're in your 40s and looking to buy a home, don't overthink it. Just make sure your financials are strong enough to make a down payment and cover the extra expenses that come with the house without compromising on your emergency expenses and retirement. Don't complicate this further, as house prices will not come down in the immediate future, and if you don't buy now, you may just regret it in the coming years. As usual, thank you for watching this video. Please don't forget to like and subscribe to the channel if not done already, and I will see you in the next video.